Lehman Brothers staff arrived at work in London this morning to be told the bank had been put into administration. Some waited around to find out what that meant. Others decided there was no point.
This means the company ceases to exist. And I guess that's all I can say.
It's disastrous, but I think people are experienced enough and professional enough to take it on the chin.
I think everyone's trying to stay positive. Yeah, so keep a stiff upper lip.
In New York, they'd seen this coming. The clear-out began several hours before the bank officially filed for bankruptcy. Up to 25,000 people now look set to lose their jobs. Lehman's collapsed because it made billions of dollars of bad investments. Rival banks decided it wasn't worth buying. The US government decided not to bail Lehman's out.
I think it's important that regulators remain very vigilant. We're very vigilant, but we do not take, and I don't take lightly, ever putting the taxpayer on the line to support an institution.
Another big US bank with problems has found a white knight, though. Bank of America is to take over Merrill Lynch, and so within the space of 24 hours, two of the biggest names in US investment banking have disappeared.
In the short run, adjustments in the financial markets can be painful, both for the people concerned about their investments and for the employees of the affected firms. In the long run, I'm confident that our capital markets are flexible and resilient and can deal with these adjustments.
Very few people in the UK have any direct financial links with either Lehman's or Merrill's, but a storm of sorts may be on its way across the Atlantic. The bank's collapse will make the credit crunch worse at a time that we face a recession. The impact is likely to be measured in jobs lost, felt in the housing market and the stock market, and therefore people's pensions.
People's living standards are still being squeezed. The economy is growing slowly. Many people's real incomes are going to stay level or even fall for the next year or two. A combination of slow economic growth and rising prices.
To soothe nerves on the market, central banks in the US, UK and continental Europe made billions of pounds of short-term loans available for banks, but that didn't prevent their share prices tumbling. Investors are asking, who's next? Tonight there are fears that AIG, sponsors of Manchester United, is in trouble. The insurance giant is reported to be seeking an emergency loan of $40 billion. John Hills, Sky News, in the city.